All right, so do you want to know the secret on how to go from a 7% to a 5% interest rates, and in some cases even lower than that? Well, today we're going to be discussing the 7 ways that Bankrate it talks about on how to go about getting the best interest rate, plus the eighth one, the bonus one, on how to go from a 7% to a 5%, a secret that's becoming much more mainstream now that we're in a buyer's market. Anyways, stay tuned. Welcome back, guys. We are going on a 6-mile run today. Also, we're going to be talking about how to get the best mortgage rate according to Bankrate, and my opinion, and maybe a couple extra, even better ones in today's market. I'll talk to you guys in a bit. I'm about to go get a haircut. See you guys in a second. And just like that, we're done with the 6-mile run. We're done with the haircut. We look nice and clean. Back here, we're ready to talk about today's topic, mortgage rates and how to get the best one according to Bankrate, in my opinion. Anyways, guys, I got the espresso ready. I'll talk to you guys in a bit. All right, so now we're ready to go over the 7 things that, according to Bankrate.com, are the best ways to get your mortgage rate down, and plus a couple other ones that I believe a lot of that aren't that mainstream, that are coming now that we're in a buyer's market. I am a loan officer licensed here in California, but just make sure if you're in a different state to check with your laws and regulations and different guidelines. Anyways, let's go with the first one, which is boosting your credit score. I truly think this is probably one of the most important ones when it comes to the fees and costs associated with the rate that, when you go with the lender that they're going to give you. The difference between a 620 and a 720 is thousands of dollars, and definitely worth waiting. If you're at a 620, worth waiting until you at least go to that next bracket of 640. If you can go over 640, save you a couple $1,000s. If anything, pay off credit card, go on Credit Karma. I know they have a couple of things to boost your credit. Anyways, let's go on to the next one. That was a really important one. Let's go on to number 2. So now going with number 2, one of the other very important ones, just like all of these are, is going to be having all your documents like W-2s, tax returns, bank statements, all of these, which is, in other words, called a qualified mortgage. It's the ability to repay rules that we as lenders and brokers have to assess the client, to know that we're not just giving this huge loan out to people knowing that they're going to quit their job, or they're not able to repay the loan back. We make sure with 110% certainty that we check off everything, knowing that there's no risk. There's very little risk to it. There's always risk, but there's very little risk. And that's something that the government made sure they did to avoid another 2008 housing crisis, and making sure we don't do anything sharky, negative amortization, no only interest, no balloon payments, but definitely having all those documents and the 2-year work history is going to help you to get into a qualified mortgage and get a much more favorable interest rate. All right, so number 3, which is saving up for a down payment. It is very important, but a huge misconception is that you need 20% down in order to get into a home, which is far from true. You can get into a home with as little as, honestly, 0% down with all the CalHFA down payment assistance programs. But if you want to get the best mortgage interest rate and you want to save as much as possible, then going for 20% down is going to help you to avoid that private mortgage insurance that lenders do, that does not protect yourself but protects lenders, just in case that you default. That's what PMI is. But yes, that's number 3, which is saving for a down payment. I personally think that if you have 10%, that within a couple years, by paying down your mortgage, getting that mortgage appreciation, and that equity building up, you're eventually going to get to 20% equity, and you're going to be able to call your lender. And then as soon as you hit that 20%, ask them to take off private mortgage insurance. By 78% loan to value, they're required to take it off. All right, so now number 4 is understanding your debt to income ratio. Definitely important when it comes to, feeling confident as a homeowner. This huge purchase that you're making, you want to make sure that you're not just surviving, but that you're well under your budget. As far as your debt to income ratio, generally within a qualified mortgage, you want to be under 43%. So that means that your mortgage payment and all your bills, not including your cell phone bill, not including your Spectrum bill, those type of small bills, but a car payment or a credit card payment does count. All those debts plus your mortgage has to be under 43%. Really understanding that and making sure that you're, at the end of the day, you make the decision as far as like how much you want to have left over for savings, for emergencies, and just as far as a personal decision, what you feel confident with and healthy with. Don't let us make that decision for you. We can say that we can go all the way up to 50%, but like I said, it's up to you what you feel is best for you. And in general, for a qualified mortgage, it's being under that 43% debt to income ratio. All right, so number 5 is going for the 15-year fixed mortgage rather than the 30-year conventional fixed mortgage. Definitely, you're going to be saving a lot in interest. When it comes to a 15-year mortgage compared to the 30, the interest rates are much lower, about 1% or 2%, but the payment is often much, much higher than most people can afford. So for this one, definitely a good one if you can afford it. Especially if you have multiple people living with you that can co-sign and are going to be on the loan with you, and you guys are in this together, like you're a family or your husband or wife, you're in this together where you can afford something much higher, but at a much lower interest rate, and you're committed for those 15 years. I strongly recommend going for that 15-year. But if it's just yourself and you can't really afford it and you need to go for that 30, I definitely still recommend going for that 30-year mortgage, refinancing later down the road if and when interest rates go down. And if you wanted to pay off your home sooner, definitely consider making an extra payment every month of a couple $100 towards principal, and that's going to save you a ton of time. Rather than that 30-year, it'll definitely save you a ton of time. All right, so number 6, last but not least, the one where I really have to sell myself, the number one reason is because I work for a broker. And number 6 for Bankrate says to go and shop for lenders, right? To see if you can get the best rate. The reason why I work for a broker is because we do that for you. We shop with at least 20 different lenders. We make sure that they give you the best rate with your specific circumstance, whether it be FICO score, debt to income, every other thing. We make sure we get the best rate for you as a broker. But yeah, Bankrate says to go and shop with different lenders. But if you work for a broker like myself, as a loan officer, we can do that for you and save you a ton of time and even a ton of money by shopping with at least 20 different lenders when you come to a broker like us. All right, so lastly, number 7, lucky number 7. It is locking in your rate. Definitely very important. I can see why Bankrate put this as one of the best ways to get your mortgage interest rate down, because when you don't lock it in and you wait a couple weeks and you're shopping around, right? And now something happened with the rates and they went up. Now you no longer can afford to purchase a home. Definitely consider locking in that rate or letting your loan officer know that you want to lock it in as soon as you get pre-approved. That is it for the 7 ways to get the best interest rate according to Bankrate. All right, so actually we're not done. This is the 8th one, the bonus, the not so secret one. Now that we're in a buyer's market, it will be the seller concessions that not only can get you from a 7% interest rate to a 5% interest rate, but it can also cover your closing costs that can be thousands of dollars. especially if you're looking to buy a home. Rather than traditionally negotiating the price of the home, you can negotiate the seller to, give you that amount to help you buy that interest rate as a form of either a permanent buy down or a temporary buy down that will save you much more in the long run. So that is the bonus, the eighth one. I think the best way to bring your interest rate down, especially in this buyer's market. If you have any more questions, I am a loan officer here in Costa Mesa, California. Feel free to reach out to me. I'll see you guys on Tuesday when I do that long run. We're going to continue to train throughout the weekend, and then come Monday we'll do that 10-miler, and I'll see you guys on Tuesday when I upload. Talk to you guys soon. Thank you so much. Feel free to like, share, comment, do all of that, even hate. Talk to you guys later. Thank you.